Let's bring in a man who is right in the middle of all the action in Washington, BlackRock's Terry Keeley. Terry previously was the top banker to central banks and sovereign wealth funds at UBS. He just took over as head of the BlackRock unit that oversees relations with organizations like those and the IMF as well. Terry, have we seen the moment where words no longer have any meaning? Because that's all we got, words.
Well, Eric, I think there's a pretty big misunderstanding about what's happened so far in Washington. Many G20 leaders have not even arrived yet. The G20 dinner last night was the first get-together, have a couple of cocktails, and how's it going? I will tell you, Eric, I've attended 20 of these sessions over the last quarter century. This is the first time I've attended an IMF annual meeting with the same sense of urgency, the same sense of purpose, the same sense of immediacy. In our bilateral meetings, I can't tell you how clear it is with finance ministers, central bank governors, that there is something that must be done, something must come out of this weekend. I think markets need to take a breather. I think there's a lot more yet to come from the policy side that will calm markets.
So based on the signals you're getting down there from meetings that you're having personally and with Larry Fink, your boss at BlackRock as well, we should have reason for confidence. Something may actually come out of this that does a concrete step, if you will, towards resolving the crisis the markets clearly are panicking over.
Eric, there's a role for the IMF to play. There's a role for the Europeans to play. There's a role for governments to play, and there's a role for private capital to play. And I have to admit, it's absolutely true. We are in the middle, Larry Fink in particular, in the middle of every important conversation where a private-public capital partnership can be part of the resolution. Understand this, too. I think there's, again, a misunderstanding. The pledges that will come out of this weekend for support for the Eurozone still do not resolve the issues that must be solved by Europeans themselves. So what still lies ahead for the ESFF, what the role that the ECB will play, the role of the EU, all of this coming together is where the resolution is, not just the IMF, not just the World Bank.
We are back now with BlackRock's Terry Keeley. He's in charge of the unit there that oversees the firm's relationships with organizations like the IMF and central bankers. Terry, you are down in Washington earlier. Even though these markets are poo-pooing the finance minister's statement, you were saying that maybe the G20 isn't done yet, or at least the IMF isn't done yet, or the ECB isn't done yet. I want to bring up a quote from David Mackey. He's the chief European economist at J.P. Morgan. He said to us there is a monstrously large amount of uncertainty and a massive range of possibilities. A macroeconomic disaster could be averted, but only by aggressive policy action. So if the policymakers aren't done yet, what could they do? What is David talking about? What are the range of possibilities right now, given that we've seen some pretty extraordinary and unorthodox policies so far?
Eric, obviously the multi-trillion-dollar question. I think, and coming on Michael's comments and Scarlett's comments earlier, there's every reason for market participants to be disappointed with the implications so far of monetary policies and fiscal policies. They just don't seem to have worked. So there's real doubt about what more of the same could accomplish. But let me tell you something that I think is very poorly understood. There is $20 trillion in the hands of central banks and sovereign wealth funds. Those assets, too, Eric, are very, very misallocated at the moment to low-risk assets at the expense of investments which could spark growth, infrastructure, bank recapitalizations, any number of things. Let's not discount in these dark hours when we're rushing to negative yields on Treasury bills as we did in the fall of 2008. Let's not discount what that $20 trillion in ready capital that does not have to go to parliaments for approvals could do when properly focused. Central banks and sovereigns themselves have abandoned the periphery. Say they start coming back into Italian debt. Say they start coming back into Spanish debt. What happens to yields? The core stabilizes. And then we're back to the races. So this risk-on trade, this risk-off-trade mentality which dominates right now could easily slip on a dime. I will make you the following bet. Come Monday, risk will be back on. we will see more consoling statements. And I thought the statement from the BRIC ministers, which was not reported, I didn't hear it earlier, the finance ministers from Brazil, Russia, India, China, and South Africa, very consoling and supportive about a capital increase at the IMF if needed. The IMF could mobilize another $1 trillion if needed. The EFSF could be expanded and probably will be expanded. The ECB is providing the last line of defense right now in the periphery for the core. This will continue. We will see Greek funds come through. It's a very dark moment. I would argue that the fear will be giving over to greed before too long.
Terry, I love it when you offer me a wager. We'll have to talk offline about what the odds are. I do want to ask you this question, though. Where does Christine Lagarde fit in?
Yeah.
She obviously cuts quite a figure and has made a big impression in her first days as managing director. Yesterday, in an interview with our own Tom Keene, she raised a couple of key questions. She said she wants to achieve a better common diagnosis of the current situation and that she wants to instill a sense of urgency among global leaders. That suggests that on the one hand, people are still living in denial, and on the second hand, they aren't prepared to move fast enough. Can Christine Lagarde change both of those points, both of those issues? Can she turn the tide at the IMF meetings this weekend?
I had a meeting yesterday, Eric, with a central bank governor, who will go unnamed, who said that she didn't think the euro would exist in 1 year, that the euro would be dissolved. I promise you by the end of this weekend, she will not hold that same position. And I think this unanimity of purpose, this sense of urgency, this sense of immediacy will pervade it's certainly been in every meeting that I've been in, and will continue to pervade the weekend. I think there will be unanimity of purpose by the end of the weekend, and I think you'll see far more consoling statements. Christine, new in the job, obviously finding her way, but certainly saying the right things. And the attitude here in Washington at the IMF meetings is, let's fix this. Let's do something. I do wager that they will.
Terry, it's extraordinarily valuable perspective from someone who knows the players involved, the central bankers, the finance ministers, the sovereign wealth fund managers. Terry, great to see you, and thanks for sharing your insights. Terry Keeley, Managing Director at BlackRock.